Swayam Prabha. Digital India. Educated India.
Yogah Karmasu Kaushalam.
Hello everyone, I am Dr.Chetna Marvadi, Associate Professor, School of Commerce, Gujarat University. Today, we will going to study Job Costing Part 3. In previous Part 2, we had discussion on number 1, accounting treatment of all cost element of job costing, number 2, job ticket, number 3, difference between job costing and contract costing, number 4, total cost determination of job costing through simple problems. Now, the learning objectives of Part 3 of job costing are number 1, to acquire better understanding in any chapter of accounting, whether financial or cost or management accounting, their continuous practical exposure is inevitable. Therefore, some technical illustrations are covered to provide better exposure to calculate total cost under job costing. Let us study important illustration for cost determination under head of job costing. Let us understand illustration 1. A factory uses a job costing system. A relevant cost data is available from the books for the year ended 31st March 2024. Direct materials rupees 9 lakh, direct wages rupees 7 lakh 50,000, profit rupees 6 lakh 9,000, factory overheads rupees 4 lakh 50,000, selling and distribution overheads rupees 5 lakh 25,000, administrative overhead rupees 4 lakh 20,000. Prepare a cost sheet indicating the prime cost, works cost, production cost, cost of sales and sales value. In 2024-25, the factory had received an order for a number of jobs. It is estimated that the direct material would be rupees 12 lakh and direct labor would cost rupees 7 lakh 50,000. What would be the price for these jobs if the factory intends to earn the same rate of profit on sales, assuming that the selling and distribution overheads has gone up by 15%, the factory recovers factory overhead as a percentage of direct wages and administrative and selling and distribution overheads as a percentage of works cost based on the cost rate prevalent in the previous year. Let us solve this example. First of all, historical cost will be prepared for ascertainment of recovery rates of different overhead. We will prepare historical cost sheet for the jobs carried out during the year ending 31st March 2024. Direct material rupees 9 lakh, add direct wages rupees 7 lakh 50,000. Therefore, our prime cost is rupees 16 lakh 50,000. In that, add factory overhead rupees 4 lakh 50,000, giving work cost of rupees 21 lakh. In works cost, add administrative overhead rupees 4 lakh 20,000, giving production cost of rupees 25 lakh 20,000. In production cost, add selling and distribution overhead rupees 5 lakh 25,000. It will give us cost of sales rupees 30 lakh 45,000. In cost of sales, add profit rupees 6 lakh 9,000. Therefore, our sales value comes to rupees 36 lakh 54,000. Second, the amount of direct material and direct wages will be actual. Third, for overheads, computation different recovery rates are to be calculated and will be applied in new job. First, recovery rate of factory overhead is equal to factory overhead divided by direct wages into 100, which is equal to rupees 4,50,000 divided by 7,50,000 in 200 giving 60%. Second, recovery rate of administrative overheads formula is administrative overhead divided by work cost in 200 which is equal to rupees 4,20,000 divided by rupees 21 lakh in 200 giving us 20%. Third, recovery rate of selling and administration overhead which is equal to selling and distribution overhead divided by works cost in 200 which is equal to rupees 5,25,000 divided by 21 lakh in 200 which is equal to 25%. Rate of profit is equal to profit divided by cost of sales in 200. Profit is rupees 6,09,000. Our cost of sales is rupees 30,45,000 in 200. Therefore, rate of profit is 20%. Now, let us prepare cost sheet for the job to be carried out during the year 2024-25. We will prepare statement in 2 column, particulars, amount, rupees. Direct material rupees 12 lakh, add direct wages rupees 7,50,000 which will give us prime cost rupees 19,50,000. In prime cost add factory overhead which is 60% of direct wages, that is 60% of rupees 7,50,000, amount is 4,50,000 giving works cost of rupees 24 lakh. In works cost add administrative overhead which is 20% of work cost, that is 20% of rupees 24 lakh, amount is rupees 4,80,000. Adding that we will arrive at production cost, that is rupees 28,80,000. In production cost add selling and distribution overhead which is 25% of work cost, that is 25% of rupees 24 lakh which is equal to rupees 6 lakhs plus 15% increase in expense rupees 90,000 making total of rupees 6,90,000 which will give us total cost or cost of sales rupees 35,70,000. In cost of sales add profit which is 20% of total cost, that is 20% of 35,70,000 and profit comes to rupees 7,14,000. Therefore, the sales value comes to rupees 42,84,000. Now, let us see another illustration. Illustration number 2. A cost accountant of a company has calculated cost for a specific job number 215 to be provided in the financial year 2024-25. The computation of cost is material rupees 70, add direct wages 18 hours at the rate rupees 2.50 per hour. It includes for department A 8 hours, for department B 6 hours and department C 4 hours making per unit cost rupees 45. Add direct expense rupees 5, prime cost is 120. In that add factory overhead which is 1/3 of prime cost which is 40 and total cost is rupees 160. You are provided historical cost sheet of the previous year. So, cost sheet of 2023-24 is given. Here direct materials given is rupees 1,50,000. Add direct wages for department A is rupees 10,000, for department B 12,000, for department C 8,000 making total 30,000. In that add specific material of rupees 4,000 making total giving us prime cost of rupees 1,84,000. In prime cost add factory overhead rupees 16,000 which will give us works and administrative cost rupees 2 lakh. Add selling overhead rupees 20,000. Therefore, total cost or cost of sales given is rupees 2,20,000. Profit given is 33,000 and sales less return given is 2,53,000. The factory overheads are based on wages. The selling overheads are based on works cost. The rate of profit will be identical to previous year. You are required to prepare revised cost sheet for job number 215. Let's prepare solution. First, during the previous year, no administrative overheads are given. Thus, works and administrative cost would remain same. Second, factory overhead recovery rate need to be calculated, which is equal to factory overhead divided by wages into 100. That is 16,000 divided by 30,000 into 100, giving us 53.33% of wages. Third, selling and overhead recovery rate need to be calculated, which is equal to selling overhead divided by works cost into 100, which is equal to 20,000 divided by 2 lakhs into 100, giving us 10% of works cost. Fourth, profit rate of previous year on cost is to be calculated, and the formula is profit upon total cost into 100. 33,000 divided by 2,20,000 into 100, which is equal to 15%. Let's prepare job cost sheet for the year 2024-25. Material cost per unit rupees 70. Add direct wages, that is 18 hours at rupees 2.50 per hour, and it includes Department A 8 hours, Department B 6 hours and Department C 4 hours, making it total rupees 45. Add direct expenses 5. Prime cost comes to rupees 120. In that, add factory overheads, which is 53.33% of wages, that is 53.33% of rupees 45, amount comes to rupees 24. It will give us works or administrative cost of rupees 144. In works cost, add selling overhead at the rate 10% of work cost that we have calculated, which is 10% of rupees 144, and amount is 14.40, making total gives us total cost or cost of sales as rupees 158.40. In that, we will add profit, the percentage that we have calculated, which is 15% of total cost, that is 15% of 158.40, and the profit amount comes to rupees 23.76. Therefore, selling price, which is rounded up, comes to rupees 182.16. The cost sheet prepared by the cost accountant is required to modify, and selling price to be quoted is rupees 182.16 instead of rupees 160. Now, we will see question where the cost of work in progress is determined. Illustration number 3. Kisan Electric Limited is engaged in job work, has completed all jobs during the year 2023-24 except job number 1500. The cost sheet on 30th March 2024 showed direct materials and direct labor cost of rupees 80,000 and rupees 60,000 respectively as having been incurred on job number 1500. The costs incurred by the businesses on 31st March 2024, that is last day of the year, were direct material for job number 1500 rupees 2000, direct labor job number 1500 8,000, indirect labor rupees 2000, miscellaneous factory overhead rupees 3000. It is practice of the company to absorb factory overheads on the basis of 120% of direct labor. Calculate the cost of work in progress for job number 1500 on 31st March 24. Let's prepare solution. First, cost data up to the date 30th March 2024 as well as for the last day of the year, that is for 31st March 2024 for work in progress is provided. Second, actual direct material and direct labor cost for work in progress up to 30th March 2024 is provided, and that is rupees 80,000 and rupees 60,000. This will be considered for valuation of work in progress. Third, further, direct material and direct labor cost of 31st March 2024, that is last day of the year, are also given. These also will be taken into consideration for valuation of work in progress. Fourth, indirect labor rupees 2000 and miscellaneous factory overhead rupees 3000 are not relevant cost for work in progress because no instruction is provided for them. Fifth, recovery rate of factory overhead is 120% of direct labor. Let's prepare cost sheet of work in progress of job number 1500 as on 31st March 2024. We will prepare two column, particulars, amount, rupees. Direct material 80,000 plus 2000, that is 82,000. Add direct labor 60,000 plus 8,000, that is 68,000, giving prime cost of rupees 1,50,000. Add factory overhead 120% of direct labor, that is 120% of rupees 68,000, amount is 81,600, giving work cost of rupees 2,31,600. Rupees 2,31,600 is cost of work in progress of job number 1500 will be shown on the asset side of the balance sheet as on 31st March 2024. Now, we will study illustration where accounting treatment of completed work and work in progress is required to pass. Illustration number 4. From the cost record of Veena Limited, data pertaining to completed job and work in progress is obtained. The information given is for job completed and work in progress given in rupees. Raw materials supplied from the stores for completed work is 90,000 and for work in progress it is 30,000. Wages for completed job rupees 1 lakh and work in progress rupees 40,000. Chargeable expenses likewise 10,000 and 4,000. Material transferred to work in progress for completed job is 2000 and for work in progress is 2000. Material returned to store for completed job is 1000, for work in progress is dash. Factory overhead is 80% of wages and office overhead is 25% of factory cost. The price of completed job is rupees 4,10,000. You are required to prepare number 1, actual job cost sheet for completed job, and number 2, job cost sheet of work in progress. Let's solve this example. First, factory overhead is 80% of wages. Second, office overhead is 25% of factory cost. Third, for completed job, profit or loss will be ascertained. Fourth, for work in progress, its valuation will be undertaken. And fifth, raw material transferred to work in progress will be debited to work in progress account and will be credited to job completed account or will be deducted from material cost of job completed and will be added to material cost of work in progress. Sixth, material returned to stores by job completed will be debited to stores control account and credited to job completed account or will be deducted from material cost of job completed. Seventh, chargeable expenses are treated as direct expenses. Eighth, no selling overhead is given. Let's prepare cost sheet for completed job. We will prepare a statement in 3 column, particulars, amount rupees, amount rupees. Raw materials rupees 90,000, less transferred to work in progress rupees 2000, less return to stores rupees 1000, giving outer column figure as rupees 87,000. In that add direct wages rupees 1 lakh. In that add chargeable expenses rupees 10,000, giving prime cost of rupees 1,97,000. In that add factory overhead 80% of wages, that is 80% of rupees 1 lakh, amount is 80,000, giving factory cost of rupees 2,77,000. In factory cost, add office overhead, which is 25% of factory cost, that is 25% of rupees 2,77,000. Amount is 69,250, giving total cost or cost of sales as rupees 3,46,250. In total cost, add profit 63,750 and our sales value given is rupees 4,10,000. Now let's prepare cost sheet for work in progress. Here also we will prepare a statement in 3 column: particulars, amount rupees inner column and amount rupees outer column. Direct materials 30,000, add transferred from job completed 2,000, therefore outer column amount is 32,000. In that, add direct wages 40,000, add chargeable expenses 4,000, making total of prime cost as rupees 76,000. Add factory overhead 80% of wages, that is 80% of 40,000, rupees 32,000, giving us factory cost rupees 1,08,000. In factory cost, add office overhead 25% of factory cost, that is 25% of 1,08,000 and amount is rupees 27,000. So, total cost of work in progress comes to rupees 1,35,000. Note that number 1, from given data, historical net profit of completed job is rupees 63,750. Second, the value of job work in progress is arrived at rupees 1,35,000. It will be shown in the balance sheet of current year. Now let's discuss another illustration number 5. The cost related information for job number 139 of A Company Limited is provided. Direct materials rupees 1,300, direct wages Department 1 80 hours at rupees 2.50 per hour, Department 2 60 hours at rupees 4 per hour. Overhead expenses were estimated Department 1 rupees 5,000 for 4,000 direct labor hours, Department 2 rupees 6,000 for 3,000 direct labor hours. Fixed overhead estimated rupees 7,500 for 10,000 hours. Information is given that material cost includes abnormal loss of materials of rupees 285 and scrap of rupees 130, from which rupees 30 are realized. You are required to calculate the cost of job number 139 and estimate the percentage of profit earned. It in selling price quoted was rupees 4,750. Let's solve this example. First, variable overheads of both the departments are based on direct labor hours. Second, variable overhead recovery rate for the department 1 is equal to total variable overhead divided by direct labor hours, which is equal to rupees 5,000 divided by 4,000 hours, giving us rate of rupees 1.25 per hour. Third, variable overhead recovery rate for department 2, which is equal to total variable cost divided by direct labor hours, which is equal to rupees 6,000 divided by 3,000 hours, giving us rate of rupees 2 per hour. Fourth, fixed overhead recovery rate, which is equal to total fixed cost divided by labor hours, giving us 7,500 divided by 10,000 hours, equal to rupees 0.75 per hour. Fifth, sales value is provided and profit is to be ascertained. Sixth, no administrative and selling expenses are provided, thus works cost will be treated as total cost. Seventh, material cost includes abnormal loss of rupees 285 will be transferred to costing P&L account. Further, scrap of rupees 130 realized rupees 30, thus the net scrap will be rupees 100. Let's prepare cost sheet for job number 139. 9. Direct material cost rupees 3800, less abnormal loss rupees 285, less scrap rupees 130, less realization from scrap 30, giving amount 100 and making total 3415. Add direct wages for department 1 80 into rupees 2.50 giving 200, for department 2 60 into rupees 4 giving 240 and total direct wages are 440. Prime cost comes to rupees 3855. In that add overheads, variable overheads for department 1 80 into rupees 1.25 that is rupees 100, for department 2 60 into rupees 2 120 making total of overhead 220. Fixed overhead for department 1 80 into 0.75 giving amount rupees 60, for department 2 60 into rupees 0.75 giving amount 45 and making total fixed overhead rupees 105, and the total cost or cost of sales comes to rupees 4180 and sales value given in the example is 4750. Therefore, the profit amount is the balancing figure rupees 570. 8th, rate of profit on selling price for job number 139 will be total profit divided by sales value into 100, which is equal to rupees 570 divided by 4750 into 100 giving us 12%. In this part 3 of job costing, we have studied specific problems containing issues like computation of recovery rates for different overheads, valuation of work in progress, deciding selling price and the profit computation of completed job. Let's conclude this session. Job costing is that method of costing where computation of total cost and selling price is carried out for customized order or job. Each job is cost unit. Thus, carefully cost and selling price determination should be done. Any mistake pertaining to either material cost or labor cost or overheads may lead to wrong decision. Important aspects to be refreshed are: number 1, revision of modules of unit costing; number 2, clarity about recovery rate methods used for overhead; number 3, accounting treatments of element of total cost; number 4, how job costing is different from contract costing; number 5, job ticket; number 6, other special or non-routine costs which are applicable to customized order; number 7, precise calculation of work in progress. Now, we will meet to study another method of costing. I hope you like the session. Thank you.